Hi guys, welcome to our channel VJ Spikes. Today's topic is on 7 new rules which would affect your savings and investments starting January 2021. Let's get started. Your money matters related to savings and investment will witness a few important changes in 2021. From writing checks to swiping of credit card to making investments in mutual funds, there are a handful of key personal finance changes to keep an eye on while moving into 2021. Number 1. Positive pay mechanism for checks. To further augment customer safety in check payments and reduce instances of fraud occurring on account of tampering of check leaves, RBI has now decided to introduce a mechanism of positive pay for all checks of value rupees 50,000 and above. Under this mechanism, checks will be processed for payment by the drawee bank based on information passed on by its customer at the time of issuance of check. Positive pay system is getting implemented from January 1st, 2021. How it works? All one needs to do is to share the details of the issued check like check number, check date, pay name, account name, amount, etc., along with an image of the front and reverse side of the check before handing it over to the beneficiary. When the beneficiary submits the check for encashment, the check details are compared with the details provided to the bank through positive pay. If the details match, the check is honored. In case of mismatch in check details, the check is referred to you. Number 2. Contactless payments. In order to expand the adoption of digital payment in a safe and secure manner, the RBI has proposed to enhance the limit of contactless card transactions from rupees 2,000 to rupees 5,000 from January 1st, 2021. The increase in limit will, however, be at the discretion of the user. On NFC-enabled cards, there is no requirement to enter PIN while making transaction at merchant establishments. Number 3. E-mandate for recurring transactions. The transaction limit on e-mandates for recurring transactions through cards and UPI will be increased from rupees 2,000 to 5,000 from January 1st, 2021. The relaxation will help users in making high-ticket recurring payments like utility bill, investments, two-wheeler EMIs, consumer durable EMIs, etc. seamlessly. The increase in limit will, however, be at the discretion of the user. A cardholder desirous of opting for e-mandate facility on card shall undertake a one-time registration process. With additional factor authentication or AFA validation by the issuer, an e-mandate on card for recurring transaction shall be registered only after successful AFA validation. In addition to the normal process required by the issuer, this facility will now be available for UPI users. Number 4. Digital payment disputes. The RBI has announced the introduction of online dispute resolution or the ODR system for resolving customer disputes and grievances pertaining to digital payments using a system-driven and rule-based mechanism with zero or minimal manual intervention. The authorized entities have been asked to implement an ODR system for disputes and grievances related to failed transactions in their respective payment systems by January 1st, 2021. Number 5. Standard Term Life Insurance Plan. Buying term insurance plan will become much simpler than before. IRDAI has directed all life insurance companies to mandatorily offer standard individual term life insurance product to be called Saral Jeevan Bima with effect from 1st January 2021. The standard term life insurance plan will have simple features and standard terms and conditions. The minimum sum assured is kept as 5 lakhs, while maximum cover can be up to rupees 25 lakhs. Anyone between 18 and 65 years of age can buy the plan. Number 6, multi-cap mutual fund scheme. There has been a revamp in the multi-cap mutual funds and they had to comply with new guidelines starting January 2021. SEBI has decided to partially modify the scheme characteristics of multi-cap fund. As per the earlier categorization, in a multi-cap fund, the minimum investment in equity and equity related instruments is to be 65% of total assets investing across large cap, mid cap, and small cap stocks. Now, the minimum allocation in large, mid, small cap companies have been defined. The minimum investment in equity and equity related instruments would be 75% of total assets in the following manner. Minimum investment in equity and equity related instruments of large cap companies would be 25% of total assets. Minimum investment in equity and equity related instruments of mid cap companies would be 25% of total assets. Minimum investment in equity and equity related instruments for small cap companies would be 25% of the total assets. Number 7, new riskometer tool. Selection of mutual fund scheme based on one's risk profile also becomes easier from the new year. Till now, the riskometer of mutual fund scheme depicted 5 risk areas: low, moderately low, moderate, moderately high, and high risk. Going forward, there will be a new risk area for the mutual fund schemes as SEBI has decided to introduce very high risk as a sixth risk profile for the mutual fund schemes. SEBI has informed that new mutual fund rule shall be in force with effect from January 1st, 2021 to all the existing schemes and all schemes to be launched on or thereafter. Hope you got some insights on the 7 rules which are totally new and would affect your savings and investments starting January 2021. Until next time, please like, share, and subscribe to our channel, VJ Spikes, and follow us on Telegram, link in the description box. Thank you.